How many of you, I've asked this every time, how many of you were here in prior sessions? Several of you, and you're still here, so thank you very much. I want to just, again, thank the folks at the Precourt Institute and at the Steyer-Taylor Center who all have helped a lot in this series, which was a long time in the making. As those of you who have been here know, what we've done so far is have, I guess I'll just sit here, is have discussions with a number of people in various aspects of the China energy industry. And the goal has been a bit different from energy seminars in the past. The goal is not to delve into the technologies themselves, but really to follow the money and get a sense of what's going on in the Chinese energy system and the impact for the world, including the US. So if you'll indulge me, I guess you will because you're sitting here today, I'm gonna take some time and walk through with you what seem to me some important lessons, particularly as concerns the US in this relationship. And I'm going to show some slides, but not a lot of slides, or at least show them only for a portion of this. I can't stand slides, but it seems to me that, that they're pretty good for just sort of painting a picture of China's energy scene. So we'll do that at one point. Let me just first start by ticking off what's happened in the relationship between China and the US over the past year or so. In the US, as you know, an energy revolution is underway. The discovery of new technologies to produce natural gas from shale has sent US natural gas prices plummeting to historic lows. That's prompting a resurgence of manufacturing in the US. It's sparking talk of exporting increasing amounts of gas around the world, including to China. And it's raising big questions about how other energy sources, everything from coal to wind to sun to solar energy, are going to compete. China wants some of that gas. Last January, China Petroleum Corporation, known as Sinopec, agreed to pay Devon Energy, a US gas producer, roughly $2.5 billion for a stake in a collection of Devon's oil and gas plays in the US Midwest. Last September, the Export-Import Bank of China agreed to loan $2.5 billion to what's called the Texas Clean Energy Project. This is a coal-fired power plant in West Texas that would turn coal into gas and then burn that gas to produce electricity in a way that would be cleaner than coal. Last October, President Obama signed an executive order ordering Chinese investors to get out of a project that was to build 4 wind farms in Oregon. The Chinese investors were organized as something called Rawls Corporation. They're executives of Sany Group, which is a large Chinese industrial conglomerate. President Obama said he was concerned that the wind farms were going to be too close to US naval property, and that Sany might, in President Obama's words, quote, take action that threatens to impair the national security of the United States. The Chinese investors sued to block the order, and in February, a federal court judge ruled that she had no jurisdiction to overturn the president's decision. In March, the world's largest solar panel maker, a company you've heard a bit about here last week, Suntech, based in Wuxi, China, announced that it was entering bankruptcy. The bankruptcy was the end of a perfect storm for Chinese solar panel manufacturers, one element of which was tariffs imposed by the United States on imported Chinese solar equipment, and potentially, probably, I think it's fair to say, tariffs that are to be imposed by the European Union next month. A few years ago, Suntech's meteoric rise made it a poster child for the emergence of a global renewable energy industry. Now the company's rapid fall is making it a poster child for that industry's crashing and burning. To put some numbers on it, in 2008, at the peak of Suntech's rise, Suntech stock traded at about $90 a share. Early this afternoon, it was trading at about 65 cents. Lest you think that's just a Chinese problem, remember that Suntech is traded on the New York Stock Exchange. So though Suntech is based in Wuxi, it's a company with a lot of investors around the world, including a lot of investors in the United States. So that's the end of my introductory litany about what's happened over the past year. I want to talk about the following today. In the push toward a cleaner energy system, China and the US are increasingly, and at this point very uncomfortably, linked. Both of these countries need each other, not just for the esoteric aim of benefiting the planet, but also for the far more practical aim of benefiting their domestic economies. So what does the US get in this relationship? The US gets Chinese money, as evidenced by some of these deals, and with it, access to China's vast market, which is hungrier for clean energy innovation than the US is, something that we'll talk about a little more in a minute. China gets access to US technology to help satisfy its soaring energy demand, and a place to invest that's lower risk than China, which is a key issue if you talk to people in China who are investing in American energy technologies. But let's be straight here. These two countries have very different motives and very different means. So Pollyanna pronouncements that the two countries should just join hands for the good of the planet are not just naive, but actually counterproductive. The US and China are first and foremost competitors. Competitors economically, competitors politically, and because of both of those things, competitors technologically. The real question is how these two countries might be able to work not cooperatively, but complementarily, each in a way that maximizes its own economic interests and that happens in the process to maximally benefit the planet. Why is this so important? Well, as we've discussed in the past sessions of this Rising Power series, China and the US are respectively the world's #1 and #2 energy consumers and the world's #1 and #2 carbon emitters. How their relationship plays out is going to have huge consequences, both for the future of the US clean energy industry and for global emissions of greenhouse gases. Here's what's fascinating to me. A complementary clean energy relationship actually is starting to develop between the US and China. It's tentative, it's spotty, and it's politically controversial, particularly in the United States. Much of it's playing out here in Silicon Valley, where many clean energy companies are having a very, very tough time staying alive and are increasingly looking to Chinese investors as a lifeline. If you follow the money, you see a few things pretty clearly. China's investing more in the United States. Most of that money is in fossil fuel, particularly in shale gas plays across the US. That's still, it's important to note, a Chinese investment in US technology, although often, I think in this context, we don't think of gas as a technological push. What China's investing in is the US know-how to get shale gas out of the ground, which is a technology essentially in the context of unconventional gas that the US came up with. Chinese investment in what many of you in this room would call clean energy technologies, I think renewable energy and cleaner ways to burn coal, is smaller in dollar terms, but it's rising. Within those subsectors of the energy industry, the interplay between China and the US is going to be one of the main narratives of the energy industry for the next decade or two. So I want to explore this fledgling relationship between the US and China today, and particularly I want to do 5 things. First, I want to frame today's clean energy challenge, which I think is tougher than energy dilemmas of the past. I think this is an important framework for understanding the differences between China's and America's motives in the clean energy push today. And understanding those differences in motives, I think, is crucial to staying clear-eyed about how the economic relationship between China and the US is likely to develop. Second, just so we're on the same page, and here's where I'm going to use some slides, I want to lay out some basic facts about China's domestic energy picture and about how China fits into the global energy picture. Third, I want to walk through a number of actual examples of how China is investing in the United States to give you a sense of how the money's moving. Fourth, so we don't all walk out of here feeling overly warm and fuzzy, I want to walk through some very real concerns that exist about a closer relationship between the US and China in clean energy. And fifth, I want to offer a couple of thoughts about what all of this might mean for the US going forward. So let me start with some context. I think it's really important to realize why today's clean energy challenge is fundamentally harder than clean energy challenges of the past. And forgive me here, we're going to go very broad, but I promise it comes back to China. So here's the challenge, as I don't need to tell any of you in this room. The challenge is to slash global greenhouse gas emissions to the levels that many scientists say would be necessary to avert the most dangerous consequences of climate change, while at the same time providing the massive increase in energy supply that the world, basically the developing world, and most particularly China, is going to need over the next few decades. Historically, plenty of places have made big energy and environmental shifts. But what I think is really important to understand is that they haven't made those shifts because of anything as distant or esoteric or shapeless as the creeping long-term threat of climate change. They've done it when they were confronted with acute crises that broad swaths of their populations felt viscerally. Wars or energy supply shocks, which threatened to bring their economies to a halt, or local pollution so noxious that it was deemed an immediate and unacceptable threat to public health. Let's look at some examples. Who's been to France? France gets 80% of its electricity from nuclear energy, roughly, today. That's a major switch from what was the case 40 years ago. What happened 40 years ago? Two things happened. France lost a war with Algeria, and Northern Africa was a large supplier of oil, and France went through the 1973 Arab oil embargo. Essentially, its supply of oil was cut off. France, unlike the United States, is a place that depends on other sources almost entirely for its oil. And so what happened in France? France had a strong central government relatively, and France decided that it absolutely had to do something. And people of a certain age in France will remember a public service announcement that played on TV. And in French, the PSA went like this: "On n'a pas de pétrole, mais on a des idées." And what that means in English is, we don't have oil, but we have ideas. What does that mean? Obviously, it meant that France had to do something significant. And what happened is that Charles de Gaulle, the leader of France, made a decision which was extraordinarily unpopular in some quarters of France, that France was going to stamp, cookie-cutter style, nuclear plants around the country. And that's exactly what France did. And furthermore, in order to pay for that nuclear construction, France decided that it was going to build a nuclear waste reprocessing plant in northern France. And so, if you go there today, it's a pretty interesting place. And France takes nuclear waste from many countries around the world, and it reprocesses that waste for a fee, and then it sends the reprocessed waste back to those countries. Now, you can agree with that decision, you can disagree with that decision, but it seems to me that at least that decision has the merit of intellectual honesty. France decided it had to make a change, and it did something massive to make that change. Let's just go on with a couple more examples, and again, I promise we're coming back to China. Germany. Germany in the late 1990s, as many of you know, implemented something called a Feedin tariff for solar energy. Why did Germany do that? I suspect that your answer to that would be that Germans' blood runs greener than Americans' blood, and indeed there's an environmental ethic in Germany. But I want to highlight two other things on this point of crisis. One was Chernobyl in 1986, which essentially convinced a lot of Germans that they didn't want to rely on nuclear energy. Again, agree with that decision or not, but that was a general sense in Germany. Number two, something I think that's less known than Chernobyl, was the reunification of East and West Germany. And why is that relevant to this? Because suddenly the former West Germany was saddled with a large population of people from the former East Germany who needed jobs. And if you look in Germany today at where the majority of solar plants are, they are in the former East Germany. So, again, back to this point of crisis, perhaps there was esoteric concern about the environment, but there was a much more immediate concern about how to employ a lot of these people, and people who are much more schooled in the intricacies of German politics than I am believe that that had a role. Let me just talk about one other example closer to home, and that is Los Angeles. Who remembers Los Angeles from the 1970s? I'm not old enough quite to do that, but I've read about it. LA in the 1970s was a smoggy place, right? And it's not so smoggy anymore. What happened? I think what happened is basically people decided that they weren't going to abide that smog, that was not something that little Johnny was coughing. That was a threat that a major city in the United States couldn't deal with. And so the United States and California enacted laws to clean up the air. And in fact, today, LA is a much cleaner place than it was back then. So why have I walked you around the world through all these examples in a talk that's supposed to be about China? Because today, I think it's China who's feeling this kind of crisis. I stepped off. Let me actually start a slide here. How do I do this? There we go. Okay. So that's Shanghai. Now, I was taking this picture through my hotel window in Shanghai, so you're getting a little bit of glare, but I don't think you're getting a lot of glare. That's what the air looks like in Shanghai. I stepped off a plane in Beijing about 1.5 years ago, and it was a night in December, and I'm not exaggerating. I walked off the plane. They opened up the jetway. Sorry. How do I do this? There we go. And it smelled like I was in a forest fire. And I suspect that many of you who have been to China lately have had a similar experience. Earlier this year, recorded pollution in Beijing hit 40 times the level that the World Health Organization calls healthy. That level of pollution is extreme even by Chinese standards. WAGs gave this recent burst of smog in Beijing a name. They called it the airpocalypse. So this is the Shanghai skyline. Where's this? Beijing. Nope. Where else? Just yell it out.
Southern.
Sorry?
I don't know the city. Southern China.
Southern China. It is southern China. Nope. Wuxi. This is Wuxi, capital of the global solar industry. This is Wuxi, where Suntech is based. And again, out of my hotel room window, but I don't think the orange haze is attributable to the window. Okay, one last slide. This was just on a trip to Beijing a couple of months ago. And again, you know, many of you who have spent time in China will realize that, you know, at some point the masks, the breathing masks, become a kind of a fashion accessory, and they're painted in different colors and stripes. So again, I just want to give us all a sense, particularly people who haven't been to China lately, of what the baseline is and what much of the motive is. So we've talked about this being a public health problem for China. It's not just a public health problem, it's a political problem. Because at the point where public concern about Chinese air starts to produce social unrest, it threatens the political structure in China. Beyond air quality worsening, beyond the political challenge in terms of air quality, is the issue of energy demand. China's energy demand is soaring. That's causing China to have to import large amounts of oil and coal, and it's leading to very real energy security concerns in China. So, we've talked about Europe, we've talked about China. Let's come back to the US for a second. I don't think the US feels this sense of crisis. Why don't we feel this sense of crisis? First of all, we've talked about LA. We've largely beaten local air pollution in this country. We're a mature economy whose energy demand is essentially peaked. We don't feel a compelling economic reason to remake our energy infrastructure unlike we did 40 or 50 years ago when we were building most of the coal-fired power plants that we now have in this country. Contrast that to the situation in China today. Not only is our energy demand flat in the US, but we're suddenly swimming in domestic fossil fuel, shale oil and gas, as we've discussed. There's been a massive increase in production of these over the past few years. Now, to be sure, there are environmental questions about producing shale oil and shale gas, environmental downsides potentially, such as groundwater contamination. But I think, like it or not, the environmental questions locally with the production of shale gas and shale oil in the US strike many people as much more manageable than the prospect of fundamentally shifting our energy system to something like renewable energy. So I think that's why over the past few years you've heard advocates of a big shift to renewable energy in the US shift arguments. First they've talked about climate change, then they talked about trying to reduce volatility in energy prices, and then they talked about green jobs, and now they're talking about technological competition with China. And I say this not by way of any criticism, but just as a bit of analysis. I think there's been a lot of throwing of arguments at the public trying to see what sticks. So where does that lead me in terms of China? Number one, it seems to me that the only way that cleaner energy sources are going to ramp up in the US in a big way is if they're made more economic. That means, first and foremost, that we as a country have to pursue them in a ruthlessly efficient way. And what does that mean? Number two, that means harnessing the globalization that's going on in the clean energy industry, particularly getting smarter about our relationship with China. So let me now jump into a couple of slides here to kind of get us on the same page as about China's energy system. All of these, many of these slides are from the International Energy Agency, from the World Energy Outlook, which came out last fall. So I'm going to go through these fast, but we can talk about questions afterward. So this is carbon dioxide emissions, energy-related carbon dioxide emissions, the lion's share of carbon dioxide emissions, and what do you see from this? I think you see two things from this. You see that in the developed world, the US, the EU, and Japan, emissions are projected to decline through 2035. And you see in China and certainly much of the rest of the industrializing world, they're expected to increase. One other thing you see, look at the expected decline in emissions in the United States between 2010 and 2035. And look at that gap, there we go, right there, compared to the gap in China. What does that tell you? What that tells you is that the projected increase in emissions in China dwarfs the projected decline in emissions in the United States. Okay. Now, this is a bit complicated, and I apologize for whatever. Despite my attempts, I couldn't get this to show very clearly. But this is a map. I see Chris Field in the audience, so I am not the expert here. But let me just give you a quick recitation. These are global CO2 emissions thus far. This is where the IEA says CO2 emissions are likely to go if the world continues on a business as usual path. This is what scientists say the world would need to do to get down to 450 parts per million of CO2. We'll forget these two lines here, but what I want to focus on is these bars. So let's just think of the red line and the green line. This is where we're going. This is where scientists say we need to go. The question is, who does that lifting? So the light purple is OECD, the industrialized world. The dark purple is non-OECD, the industrializing world. So US is OECD, China is non-OECD. What does this tell you? This tells you that most of the lifting is not going to come from the United States and Europe and Japan. Most of the heavy lifting is going to come from China and India and the rest of the industrializing world. And I think that, in a nutshell, tells you a lot about what you need to know about the politics of climate change and the interplay diplomatically between the US and China. Okay, let's keep going. So just a couple of pie charts to kind of get us on the same page about electricity production. This is global electricity production. And what do you see from this chart? Can everyone see this? Yeah. So you see that, first of all, that fossil fuels are going to decline by about 10 percentage points. Again, this is according to the IEA. Nuclear is going to stay basically flat. And what's the big change? The big change is going to be a rise in wind and solar from about 2% today, effectively today, to about 10% in 2035. Okay, that's the world. There's the US, essentially the same, a bigger share of nuclear energy than the world as a whole, but basically the same sort of story. And there's China. Now, a couple of things about this. What is this? What do you see? First of all, you see that nuclear is a negligible percentage of the Chinese pie now, and it's expected to approach the world total by 2035. China is by far the epicenter of the nuclear construction in the world today. You see that rest of renewables stays. First of all, rest of renewables is larger in China than it is elsewhere in the world or in the world as a whole. That's largely because of hydropower. China has a quite large percentage of hydropower. And then let's talk about wind and solar. So wind and solar is 1% in China today and is expected to grow to 11%. Now, one last thing I want you to keep in mind. These pies all look like they're the same, but indeed they're not the same. The Chinese pie is a lot bigger than the American pie, right? So at the same time that each of these slices, or the slice of wind and solar, is increasing as a percentage of the pie, the entire pie is increasing. So it's an extraordinary amount of energy that we're talking about. Okay, so you may have heard of the 12 5-year plan in China. This is China adopts 5-year plans, and it's a signal, and often more than that, from the central government about where China wants the economy to go. Among the provisions in the 5-year plan is energy, and here are 3 of the major targets in the 5-year plan. Reducing the Chinese economy's energy intensity by 16%. That is to say, reducing the amount of energy consumed in the economy to produce a given amount of economic output. Boosting non-fossil sources, which China defines as renewable energy and nuclear energy. Boosting those sources to 11.4% of all energy, not just electricity, but all energy, from about 8.6% in 2010. And reducing the carbon intensity of GDP, of the economy, by 17%. Something fairly closely allied to reducing the energy intensity of the economy. Now, I didn't crunch these numbers. These numbers were crunched by a consulting firm called Rhodium Group. But basically, the message here is that there's a lot of work to do in China. China is making some progress, but if it's going to meet these targets, it's going to have to redouble its effort and do more in the next 3 years than it did in the last 2 years. Okay, a few more. So, coal. Coal is 80% of the energy mix in China. 80% of the electricity mix in China. And what do I want you to see? I mean, we talked about who's going to have to do the heavy lifting. So look at the United States for a minute. The United States, in red, is where coal generation was essentially now, and this is the gray is the change between now and 2035, and so the diamond here is where what the level's expected to be in 2035. So the U.S. goes down, the European Union goes down, other developed countries slightly go down. Look at China. Okay, same 2 messages here as before. China, first of all, goes up, and second of all, if you look at the amount by which China goes up, it's far more than these 3 things combined. Message here is that China is where it's at, right? Okay. Oil. Oil demand, these are my titles, not the IEA's titles, but the IEA's numbers. So, look, this is going to start to look very, very familiar as we go through a couple more of these, and I promise there are only a few more. But oil demand. So, again, you look at growth in oil demand through 2020 in blue, and then to 2035 in green. And again, what do you see? You see that there's not a pullout here for the United States, but you see the US is in here, that oil demand is actually declining in the developed world. Why is that? That's partly because our populations aren't growing much, and it's also because we're shifting from manufacturing to a service economy, essentially outsourcing a lot of the manufacturing we're doing to places like China. And it's also because we're getting more efficient in everything we do, and what's relevant in oil is transportation, and indeed our cars and trucks and planes and trains are getting more efficient. Okay, so that's the good story, and then there's China, right? And again, look again at the increase in China and compare it to the decrease elsewhere. Okay. Gas, we talked about gas. So I just want you to see a couple things here. China, so this is electricity generation from natural gas in the United States, and this is the gain, the projected gain. The US obviously produces a lot of electricity from gas. Here's China, essentially not essentially no, but negligible electricity produced from gas. Massive expectations of natural gas production in China. There is great disagreement about the extent to which that will be realized. Next week, if you come, you'll hear from one of China's top energy planners who I think can give us some interesting insight into that. But the point is, if that happens, that'll be a fundamental shift in China's energy and electricity pie, but also a fundamental shift in the US in the global natural gas markets. Okay. Nuclear. I mentioned that China is essentially where it's at in terms of nuclear energy. What I want you to see again, same story essentially as in gas. China has negligible nuclear energy production now. Look what's supposed to happen by 2035. So this is the Americas, including the United States. China is expected, China's nowhere compared to where this part of the world is now, and they're expected to be, just China alone is expected to be almost as large. Okay, the bottom line is President Obama talks about an all-of-the-above energy strategy. China's pursuing an all-of-the-above energy strategy. Okay, last one of these slides, renewable energy. Very, very difficult slide, I apologize, but let me just point out a couple of things. First of all, as is probably news to almost none of you, when people talk about renewable energy, the vast majority of renewable energy in most economies is hydropower, something that I suspect many of you don't mean when you talk about renewable energy. Let's look at the world, the United States, and China. So here's the world. What a couple things to point out, right? Quite a large increase in projected wind demand. Solar is not even on this list right here. Solar is going to be significant, at least in the context of the size of the world pie. Let's go to the United States. Again, in the United States, a big projected increase in wind, big projected increase in bioenergy and solar, and then let's look at China. So again, massive increase in wind, and given the fact, again, let me just point out that these are percentages, right? So this suffers from the same problem as those pie charts. We don't get a sense of the fact that China is a much bigger market than the United States. So if these lines were drawn to size, the China line would be off the chart. But even that bit of solar, even that bit of wind is huge, essentially probably the largest solar and wind markets in the world, given the size of the Chinese market. Okay. Yeah, let me just give you a little reward for having watched this slide. So this is Suntech's headquarters in Wuxi. We saw Wuxi in the slide with all the smog a moment ago. Those are solar panels. This was taken, I guess, about a year ago in happier times for Suntech. And this is inside the Suntech factory. One of the things that's interesting to do is to compare the degree of automation and manpower in Chinese factories versus American factories. Okay, so done with the slides. We can dig into some of that if you want later. Let me take about 10 more minutes, and then we'll open it up to questions. So we talked about Chinese investment in the United States, and let me just go through a couple of examples here. And before I do that, let me give you some context. There's a consulting firm called Rhodium, which I mentioned in the context of a slide there before. They've tracked Chinese foreign direct investment in the United States since 2000. Of the $25.4 billion in Chinese foreign direct investment in the US that Rhodium has tracked, the single biggest chunk, $10.6 billion, or a little over 40%, has been in energy. 10 billion of the 25 billion has been in energy. Now, most of that has been in fossil fuels, and the number has been increasing dramatically over the past few years. So let me go through a couple more examples. China National Offshore Oil Company, CNOOC, tried to buy Unocal, you will remember, in 2005 for $19 billion. You'll remember that that deal went down in flames. What essentially happened is that there was righteous indignation in the United States about the notion of a Chinese company buying an American company. CNOOC backed down, Chevron emerged, and Chevron bought Unocal. And what I think is really interesting to think about is to look at the structure of the deals that have occurred in the wake of the failure of the CNOOC-Unocal deal. So China, instead of trying to go buy entire very large American companies, has gone to trying to take stakes in companies, often non-controlling stakes, to try to buy assets, but in amounts that aren't likely to trigger concern in the United States. And to the extent that China is buying companies, to try to buy basically smaller companies that have no choice in the minds of many people but to sell to the Chinese. So let me give you a couple of examples. China Investment Corp, CIC, the biggest sovereign wealth fund in China, paid $1.6 billion in 2009 for a 15% stake in AES, which is a large utility. In 2010, CNOOC agreed to pay more than $2 billion for a stake in Chesapeake Energy, Chesapeake's holdings in shale oil and gas plays in Texas. Why? CNOOC wanted obviously a piece of those plays, but it also wanted the know-how that comes with watching someone operate those plays, on the theory that CNOOC can then go back to China and be more astute in developing China's own shale oil and gas plays. You heard a couple of weeks ago that from David Moeller from Duke Energy that 3 Chinese banks invested nearly $700 million in a credit line to Duke. These were the Bank of China, the Industrial and Commercial Bank of China, and China Merchants Bank. It was the largest ever participation by Chinese banks in a credit facility in a US utility, and Duke is pursuing more Chinese money. You heard from Sunny Wu of GSR Ventures a couple of weeks ago that you heard of Boston Power, a company that was trying to make batteries in the United States, failed to get federal stimulus money, started looking for money in China, got in 2011 $125 million from a consortium of groups, including GSR, to go and commercialize its technologies in China. And that's what's happening now. There's a R&D center that Boston Power has in Beijing and a factory in Shanghai. So let me just skip forward and let's talk about two deals just this year. Hanergy, a large hydroelectric power producer in China, bought Mia Soleil, a thin film solar producer based here in Silicon Valley. In 2008, this is somewhat similar to the story about Suntech stock. In 2008, Mia Soleil was valued at $1.2 billion. Hanergy paid between $30 million and $120 million. It's not entirely clear. But what that means is that Hanergy paid at most 1/10 of the peak value of Mia Soleil. So essentially, the Chinese investors bought this company for pennies on the dollar when American buyers were not interested. Last one, January of this year. After a long fight, China's Wangshan bought A123, a Massachusetts-based battery maker, for $250 million. Now, I think the backstory here is interesting, so let me just take a minute and play this out. In 2009, A123 got a $250 million grant from the Department of Energy as part of the federal stimulus plan to build a factory in Michigan to build batteries. But A123 could not make a viable business in the US. And so in August, Wangshan initially offered, in August of 2012, offered to pay $465 million for A123. But that that attracted the ire of lawmakers in the United States who were concerned about Chinese investment in this company. The company had a portion of its operations selling to the military. So the U.S. blocked that sale, and A123 walked away from that sale. And then ultimately A123 declared bankruptcy. And so as a result of having declared bankruptcy, there was a structured bidding process for this company. And there was an offer from Johnson Controls, an American company, for about $150 million for A123, roughly a third the price that Wangshan initially was going to pay. And at the end of the day, the winner paid $250 million for A123. And does anyone know who the winner was? Wangshan. Wangshan paid $200 million less for A123 through the bidding process as a result of bankruptcy than it initially had offered to pay. So I'm going to take a couple more minutes and then I'll stop and we'll have some questions. So essentially the narrative that I've been talking to you about is that China feels the impetus for developing clean energy in a big way, and that there's a lot of indication that there's Chinese money coming into the US, and that's a wonderful thing. Let me flag some very real concerns here. One is intellectual property. China, there's long been, as I'm sure you know, concern on the part of American companies and European companies doing business in China that they're going to have their IP stolen, to put not too fine a point on it. And it's clear that China is adopting much more rigorous policies to protect intellectual property. Sunny Wu stood here from GSR Ventures a couple of weeks ago and essentially said that, that you ought not to believe in China that your IP is going to be protected. Let me just talk about a couple of battles going on right now. American Superconductor, has anyone heard of American Superconductor? It's a large American company. It licensed wind control software to a Chinese company called Sinovel, which makes wind turbines. It later accused Sinovel of having paid $1 million to a 38-year-old employer of Sinovel who, according to American Superconductor, stole American Superconductor's technology having to do with the way the control systems in wind turbines. And according to American Superconductor, that technology later wound up on Sinovel turbines. Sinovel vociferously disagrees with those allegations, and the litigation continues. General Motors has a joint venture with a Chinese company to build cars, GM cars for the Chinese market. But I think it's interesting that GM has decided to draw certain lines on the cooperation. For one thing, GM has a new technology center in Shanghai where it's doing work on lithium-ion batteries. That is, the batteries that are going to be increasingly important in making electric cars go farther on a charge. And it turns out that that lab is not part of the JV between China, between GM and its Chinese partner. And what a GM executive told the Wall Street Journal, which I highly commend to you as a newspaper, is the following: "We did this alone because we want 100% ownership of the technology that we develop here." I just want you to think about that. One interesting change on the IP front is that Chinese companies themselves are getting a lot more concerned about protecting IP. In fact, we had a workshop in China last year in which an executive at one large renewable energy company from China basically said that she was concerned that China wasn't protecting IP enough. And you know that when Chinese companies themselves start to be concerned about their government's lack of protection in their view of IP, in the view of a lot of people, that goes a long way toward explaining why China is ratcheting up its IP protection laws. Okay. That was IP. Number two potential concern, or real concern, that government support for clean energy companies in China is just unfair. So this is playing out most spectacularly in the fight between China and both the US and the European Union over solar panels. Allegations by the US and the EU that China is dumping, to use the technical term, dumping solar panels on the global market. And essentially that China is using cheap money from state-controlled banks and very cheap subsidies from provincial governments, everything from cheap electricity to free land to free buildings, to incentivize or to boost its clean energy push. We're going to get some greater indication of this next month when the European Union decides whether to slap tariffs on Chinese solar panels. I think the broad expectation is that that will happen. On the one hand, it's a measure of the importance of these technologies that they are now the subject of international trade fights. I guess the only thing I'd say in terms of these things is that it seems to me there's a plausible argument that these kind of protectionist barriers ultimately raise the price of clean energy for consumers. And so if there is a way for countries to protect their own industries or to ensure that their competitors are playing fair, that's probably a better way to do it. Okay, so those are both issues of whether the way China is playing is fair. The last bit I want to discuss is whether the way is what I think is probably more significant, and it's a threat that exists to clean energy in both the US and China. It's essentially the economic efficiency, that is, the economic inefficiency, the waste of money that's inherent in the way both countries, both the United States and China, are pursuing clean energy. Here's the issue. I think it's pretty clear that the subsidies in both countries have been economically sloppy. They've failed to maximize clean energy bang for the buck. Evidence of that sloppiness is mounting, and it's turning public opinion away from supporting these technologies. So let me try to support my contention that these policies have been sloppy in both countries. Let me give you an example from the United States, and then I'll focus on China. So in the United States, let's just take renewable energy for a second. Renewable energy is supported largely with something called an investment tax credit or a production tax credit. It turns out what happens is that someone who invests in a wind farm or a solar farm gets a credit against that company's federal taxes. But traditionally, the large players in these industries have been either European firms or very small American firms. In both cases, firms that don't have enough tax liability to monetize this tax credit. That is, they can't take full advantage of this tax credit. So what do? They hire banks to take full advantage of this tax credit. Wall Street plays the role as a middleman, and again, there's nothing wrong with that. But there are studies that suggest that something like 30% of the money that the federal government is spending on these investment tax credits is going not to build wind farms or solar farms, but going to the Wall Street banks who are playing the role as middlemen in these deals. Now, that's the way capitalism works. All I want to suggest to you is that there are probably more efficient ways to do it. And let me move to China and talk for a moment about inefficiency in China. I want to talk about wind and solar for a quick second in China. China has adopted policies to incentivize wind and solar based on the amount of money that investors invest in a wind turbine or in a solar panel, not based on how much electricity those things produce. So what happens when, we talked about this a little bit last week. What happens? You get a rush to invest in the metal, M-E-T-A-L, and you don't necessarily get metal that's very efficient. And so in China, one of the results is that something like 25% of wind turbines that were built in Inner Mongolia, which is the center of China's wind industry, are not connected to the grid. And there's another example playing out as we speak in China, which has to do with an incentive called the Golden Sun Program. So this is an incentive that China rolled out in 2009 to ramp up a domestic solar industry because of a concern that virtually all of China's solar panels were being exported to Europe, a small number to the United States, and that wasn't very sustainable. So China rolled out this program called the Golden Sun Program, which had two problems with it. One, again, is that it was an investment credit, and so lots of solar panels were built that weren't very efficient. And number two, it turns out that because of the way this incentive is structured, the developers of solar farms often estimate their cost, the cost that they're going to incur to the government long before they actually buy the solar panels. And so by the time they buy those solar panels, because the price of solar panels is declining, they actually incur a lower cost than they told the government they'd incur. And yet they get compensated by the government on the higher estimated cost. Now, I'm not breaking any news here that the Chinese government doesn't already know. There's word that the Chinese government is actually going to end the Golden Sun Program and try to replace it with something much more efficient. But what I want to just leave you with is that in the context of increasing concern about clean energy, maybe the most important thing is for the world to become more efficient about how it pursues it. And so clearly, the US and neither the US nor China can afford to fritter away money like they've been frittering away. I was going to talk a little bit more about specifically what we might do in the United States, but I'm going to leave it here, and perhaps there are some questions and we can get to that. There, thanks very much. Any questions? Yeah, Ivan, hi.
Yeah, thanks for your comments about the investment tax credit. What do you think about a feed-in tariff program or some other means to incent renewable energy here in the U.S.?
So a feed-in tariff is a means that's been tried in Europe, particularly in Germany. And essentially what this does is it guarantees developers of renewable energy projects, particularly solar projects in the case of Europe, that they can sell two things. It guarantees them that when they produce energy, they can sell that energy into the grid. And number two, it guarantees them that they can sell that energy into the grid at a higher price than conventional energy costs. I think basically it's not going to happen in the United States in any great way. There are a few small examples in municipalities of where this has happened. There's a raging debate among energy experts about what's the most efficient way to do it. I guess I'm sort of a realist, and I think to me the most persuasive argument is that we tend not to like to provide guarantees like that. We tend in this country to deal with energy largely through tax breaks rather than through guaranteed premium prices. And so I suspect that to the extent that the tax incentives are going to be reformed, they're going to be reformed in a much more piecemeal way that doesn't carry with it the T word. And there are a number of interesting things being discussed in Washington, basically ways to broaden the pool of investors who can get a break by investing in renewable energy. The concern about the investment tax credit, as I said, being that it's open only to a very small group of deep-pocketed players, and therefore open to players who exact a premium for their participation in it. Mark.
So, Jeff, you know I spent last week in China playing the role of Pollyanna. So,
By the way, if you guys don't know Mark Zobak, Mark is Stanford's expert on natural gas, among other things, and doing a lot of work in China. Yeah.
and so, spending time with graduate students, asking hard questions related to some of the topics you addressed, you made the case, and I think it's absolutely clear, that on the greenhouse front, if you lose China, it's game over. So we have every incentive to work as constructively with China as possible. And so while issues of IP are important, but we fight with American companies fight with American companies, we fight with companies all over the world, that's not new. Duke Energy is going to China for IP, we heard a few weeks ago, as well as money. Unfair government subsidies are issues that we face in every industry on every day. So what I mean by Pollyanna is that we have far more in common to help China solve these problems, whether it's pollution, whether it's energy security, and at the same time combat greenhouse gas emissions. So it seems like we've got to find a way forward far more effectively than we have in the past, and we have to get past these problems. But really, that challenge is moving forward together. There is no choice, is there?
So this was going to be my last bit. So thank you very much. Thank you for the opening. Yeah. So let me just make 2 points. Let me make 2 points. One is, I think it's really interesting as a broad proposition to look at the dichotomy between the political rhetoric and the actual movement of money. The political rhetoric in this space is extraordinarily acrimonious. Beijing and Washington are fighting over all sorts of issues. IP, they're fighting over the solar panel tariffs, they're fighting more broadly on trade issues having to do with energy. And so what I hope I've done here is just give you a little taste of the fact that against the backdrop of that fighting, actual money is moving. And money is moving, I suspect, well, you've heard some of it in the past couple of weeks, not by people whose view is, I want to help save the planet, but by people whose view is, I want to help thicken my wallet, and that the clearest way to do that, given a lot of realities, is to build this bridge across the Pacific. The other is that I think it's really important. It seems to me that the way not to be Pollyanna about this, but the way to be complementary, is to think about how each country plays to its strengths. What does China do best, and what does the United States do best? I think partly because the reason I talked about motive here is that I think there's a lot of discussion in this country about the intricacies of policy. Why don't we tweak this or tweak that? I think it's really important to understand why we're doing what we're doing and why we're not doing what we're not doing in the context of our lack of motive in this country. And so if we don't feel the fire under us like China does for reasons of pollution or of increase in energy demand to do something in clean energy, it behooves us to think about how we do this in a way that maximally makes money. And one way that we do it is sort of not trying to do everything, but trying to do the stuff that we do best. So I'll give you one example. I've talked a lot about solar, and I'm sorry, I'll just say one more thing about solar. Should we be making solar panels in this country? At least polysilicon-based solar panels in this country. I mean, we can have a discussion about that, but it seems to me there's a plausible argument that China's already won that game. A lot of the, but if you talk to people in Washington, at least among a swath of people in Washington, there's real concern about admitting that China has won the polysilicon solar panel game, because for two reasons. One is that loses you Michigan, to the extent that Michigan has factories. And number two, there's a feeling that if we sacrifice manufacturing in this country, we necessarily sacrifice innovation. And I just suggest, I won't wax on here, but I suggest that we're going to probably have to think in a more sophisticated way about what American innovation means in the context of what Chinese innovation means going forward on this stuff. Anything else? Yes.
You mentioned several Chinese investments that were blocked due to national security concerns. In your opinion, are any of those concerns valid?
Are they valid? I mean, I don't know enough about the case. For instance, the case in Oregon to know whether it was valid. I mean, that's the details of that are not clear. So I don't know about the national security concerns. I mean, this is part of a broader debate over cybersecurity, right? Which colors not just the energy discussion, but broadly the relationship between the U.S. and China. I think, let me also just mention this concern about unfair support on the part of China of these industries. And at the end of the day, a lot of very well-paid lawyers are litigating this, and we'll see how this ends up. But I do think one thing that's important to think about is that China has a fundamentally different system of paying for these technologies than the United States does, right? There is something about a system where there's a central government that, albeit, despite the fact that it can't control anything, can control more than the US government can. There's something about a network of state-controlled banks. And so there's a kind of an inherent ability by China to prosecute national industrial strategy that's just different from the situation in the US. And it seems to me that, I'm not sure I'm answering your question, but it seems to me that I've heard a lot of calls for the US to just get more like China, for us to sort of have the constancy of purpose that China does, or have the structure, the consistency in terms of political drive that China does. I'm not sure that's very likely to happen. And so it seems to me that, I mean, like it or not. And so it seems to me that one thing to think about is what is likely to happen in the context of American reality. One thing is we can figure out what we do best technologically and play to that strength. And another thing is we can sort of maybe realize that we're not going to have one national strategy that's as clear as China and just sort of deal with that, figure out what that means. Yes, hi.
So when you show that graph where potentially natural gas production could go up significantly, China and certainly like India, I mean significantly, is that based on the assumption that we and I guess maybe Australia and Oman, we export liquefied natural gas, or is that essentially that they're going to try to drill for their own domestic?
It's a really good question. Yeah, so did everyone hear that? The question is basically, to the extent that there's an expectation that China is going to produce a lot more of its electricity from natural gas, is that coming from imports or is that coming from domestic natural gas production? So to be sure, a lot of it's coming from imports. And in fact, one of the discussions going on in the United States right now, extraordinary in the context of energy history here, is whether we should be exporting some of our natural gas, a good deal of our natural gas. That would have been unheard of 5 years ago in this country. But obviously, one place to which we might export natural gas is China. But clearly, China is very, very interested in developing its natural gas resources. Now, we'll talk about this more next week. when the planner from the Energy Research Institute comes. But it's interesting to me that China's domestic projections of its natural gas development are very bearish. That is to say, China does not project that it's going to be producing nearly as much of its, that it's going to be producing a lot of its domestic natural gas in the next 10 years, say. And that goes to concerns about the technological difficulty of getting at China's natural gas. It's deeper and it's a much denser formation than is the case in the United States. But there are people who disagree about that, and I know there are some people in this room who disagree about that. So this is just a matter of projecting the future. But clearly China wants to import, and clearly China wants to develop domestically. Other things? Yeah, Chris, hi.
Hi. I could understand your whole argument based around the idea that China is essentially striving for improved air quality, meeting increased energy demand, but there's also a nominal climate change set of objectives that are out there somewhere. I guess I didn't get a very clear sense of whether those are really nominal or whether they're serious about them and are willing to put some additional incentives in place in order to advance a broader climate change agenda that's not just a sidecar to meeting the energy demand.
Well, so Chris Field, for those of you who don't know, is on the IPCC and is about the best expert in this room on this question. But I'll make an attempt. I think when I talk to people in China, my sense is, look, China has climate objectives, obviously, right? We talked about the 5-year plan climate objectives. It seems to me, though, that what's really driving China's policy are much more palpable objectives. That is, diversifying China's energy portfolio and addressing dirty air. Because those things are, you can chew the air, and everyone can see which way energy demand is going, and that's a real concern staring the country in the face. And I'm not sure that China, my sense is that it's been very difficult for people who want to push real progress on reducing carbon emissions to get a lot of traction in the United States. And it's similarly difficult in China, except that China has a central government which can make decisions that are much easier to make than the United States government's decisions are. So I think China has articulated climate goals which are not as stringent as a lot of people in the West would like. But I guess the analysis I find persuasive is that China has articulated climate goals which are consistent with the goals that China has for diversifying its energy portfolio and reducing its air pollution. And to expect that China is likely to adopt climate goals that are far beyond that is probably not very realistic, because it just hasn't happened so far. Anything else? I think we're about at time. Thank you guys very much. I appreciate your coming. And just one other bit. Next week, we're going to have the last series in Rising Power. We're going to have the #2 energy planner from the NDRC's, the National Development and Reform Commission's Energy Research Institute, essentially the guy with his hand on the lever, to talk to us about what he sees and what the Chinese government sees for the next 10 or 20 years in China's energy system. So please come, and thank you again for your time.